Hey everyone, Mozart here. Quick update on altcoins. Yesterday, the day closed at around $840 billion. So, the minimum target has been reached. Minimum target. And right here on the chart, this is where the largest trading volume is in the entire visible area. Basically, starting from Trump's victory, these are the biggest trading zones. There are a few of these zones here, but two stand out as the largest. The biggest one is right here. We're above it. We've basically bought it back. And the second one is somewhere around 900. Here, this is where it runs through. $900 billion. I believe that the price will reach the 900 mark with a high probability now. That's why it makes sense to consider longs in altcoins on pullbacks. Longs in altcoins. In which ranges can you consider them? Right now, picking a specific altcoin probably doesn't make much sense, choosing something in particular. You can choose what you like, something that has dropped a lot. And it doesn't have to be a top altcoin, it can be something that used to be at the top, like Arbitrum, Optimism, something like that, maybe near, I don't know. Well, something that used to be in the top. And on pullbacks of total 3, buy back exactly the altcoin you like. You can even use Ether, it doesn't matter. Where could the kickbacks be? Here I am now considering two options. First, there will be practically no kickbacks. And we will bargain here. Well, maybe we will give a little bit more down there, just a drop, practically completely unnoticeable. And let's move on to test the 50 and 200. That is $850, $870 billion, somewhere around there, with a possible spike up to 900. That's the first option. The second option is a pullback that closes these gaps. That is, all the way down to closing, probably, this gap from June 23rd. So, roughly all the way down to here. So, down to around $790 billion. There could be a pullback to this level before we turn around and head back up again. Keep in mind, this happens often, and it's also common in the current setup. And, by the way, this week, we actually drew an engulfing candle here, absorbing the dump candle from the start of the Iran-Israel war. We drew an engulfing pattern here, and now it's basically the same thing. So we've broken out of both the red channel and the blue channel. Either we stay above the blue channel, consolidate a bit, and keep moving up, or we consolidate part of this candle around the 790 area, do a retest with a buyback, come back, and still end up going there anyway. And that's my base scenario right now. So in this range, if there are pullbacks, somewhere here, starting, I don't know, from around $825 billion and down to $790 billion, this is where you can consider going long. So you don't have to just set a limit order at the top here, you can also place them in the middle, or lower, at the bottom of the range. Don't put all your money up here at the top. Anything can happen. It could go deeper. Heads up. And as for altcoins, it doesn't matter which ones. Right now, there isn't any super special altcoin that's moving against the rest. Well, maybe, hype is on the rise. Yeah, it's super liquid, but... Or Monero. But Monero doesn't really seem to be moving against the rest anymore. It's calmed down a bit. So right now, almost all altcoins are moving more or less the same, while only Bitcoin is gaining dominance. But these first signs that have appeared already give some reason for optimism. Well, at least judging purely by the chart, for me personally. And I'll say it again, if we're going to start some kind of alt season or something resembling an alt season, to see those big green candles, those beautiful green candles, or maybe even ones like these after Trump's victory, then it needs to start more or less in the current range, maybe a bit lower, or somewhere within the current levels. All right. And, accordingly, the cancellation of this scenario would basically mean the cancellation of the entire alt season. Basically, because if we drop below 790 again and close down here, right below the 790 mark, below last week's buy-up and engulfing, then that's the target. Here's the target, 200, 100. Basically, anything closer to the $600 billion mark. A complete retracement of all that Trump-era expansion, all of it. At that point, there's no sign of an alt season at all. If we retrace all of this, we'll be stuck here for a long time. But for now, we have what we have, and there's still a trend reversal. Although, of course, if you look at the technical trend, it's just a single expansion wave. But if you look at it ideologically, like the end of the war, lowering inflation, and so on, then there's its own trend developing within the expansion. 1, 2, 3, 4, 5, 6, 7. Here's the turning point. And we broke through it. We broke it at the beginning of May. Here was the expansion, and now there's a correction to this impulse. This is a correction. And basically, here's the target after this impulse, to go somewhere around here. But that's the very trillion I'm ultimately expecting.